Hi, welcome back. Today I'm starting the beginner series, how to trade. And then the first thing you need to know when you want to learn how to trade is to know candlestick pattern. And then we have the bullish reversal patterns and we also have the bearish reversal patterns. So I'll be taking you through this class to show you both the bullish and the bearish reversal pattern. And then I will also show you what are the things you need to look for to know that these patterns are very valid. So let's just go into the lecture. And the first one is the dragonfly doji. Dragonfly doji is a bullish reversal candlestick pattern, and then you see it at the bottom of a downtrend. And then another one we have is hammer. Hammer and dragonfly doji, they almost look alike, function alike, but hammer has a little real body while dragonfly doji does not have real body. That is it. And then another one we have is bullish engulfing. Bullish engulfing, I like bullish engulfing a lot because it's totally changed the sentiment in the market, and it's found, the valid one is found at the bottom of the downtrend. Another one I'm showing you today is morning star. Morning star is another one, so I will show you the pictures and everything later. 3 white soldiers, and then we have piercing pattern, and we also have tweezer pattern. So these 7, we have many others, but these 7 keys bullish reversal patterns. They are the key bullish reversal patterns. On the other hand, I'll go to the bearish reversal patterns now. We have gravestone doji, we have shooting star, and we have bearish engulfing, we have evening star, we have 3 black crows, we have dark cloud cover, and then we have tweezer top. So you can see that we have the bullish and the bearish counterparts, and then these are the candlestick reversal patterns, both bullish and bearish. And then if you go further, you know that dragonfly doji and the gravestone doji, they are opposite. You find this one at the bottom of the downtrend, and you have this one at the top of the uptrend. So, and then you say at the hammer and shooting star, they are the same candlestick formation but opposite. This one is found at the bottom of the downtrend, and also this one at the top of the uptrend. So you can see that they are opposite. Bullish engulfing and bearish engulfing, just the way I showed you. Bottom of the downtrend, top of the uptrend, morning star, 3 white soldier and 3 black crows, piercing pattern and dark cloud cover, and then tweezer bottom and a tweezer top. So you see that they are just opposites. If you know how to trade one, definitely you know how to trade the second candlestick pattern. So let's go to how they formed, and you know. So this is dragonfly doji, so it can be green, can be red. And then what happened and how to recognize it. So the first thing to know is that this thing must appear at the bottom of the downtrend. That means there must be a push down or a push down that break this low, and then you now know that this is a downtrend, and then you now see this pattern. So you must see there must be a preceding downtrend. That is it. Don't just choose something to be your pattern. Know that there must be a preceding downtrend. So there must be a downtrend before this thing appear, and that ensures that you are picking the right candlestick pattern. It looks like T. Sometimes it looks like T. Sometimes it looks like T with very small upper shadow. If the upper shadow is very longer, that is not the dragonfly doji. But this small is still within the range, without upper shadow or with small upper shadow, and that is it. The opening and the closing price are the same. The candle opens here, travel down, come back here, go up small, and then come back to the original state. That is it. And it has no real body but a long lower shadow. No real body on this chart, no real body but a long lower shadow. Long lower shadow, that is it. No real body, long lower shadow. Then we have the hammer and the dragonfly doji. They work the same way, but there's a little different to the formation. You can see that this one has a small real body, and there's sometimes small nose, which is small upper shadow, and a long up shadow. And how to recognize it? You must have a preceding downtrend. You know, there must be a preceding downtrend, and this thing needs to appear at the bottom of the downtrend. The next episode of this video, I'll show you how to trade it, and then you can now know how to trade it very carefully. And then it looks like square lollipop with a long stick. No, this thing look like a lollipop. Truthfully, it look like a lollipop, but the long lower shadow. If the shadow is on the other side, you are talking about another pattern. And if you see this one at the top of the uptrend, you are talking about another pattern. That will be an hanging man. So the location is very different. So you do not compromise the location. You have to ensure that the location is the bottom of the downtrend. If you find something exactly like this at the top of the uptrend, it's called hanging man. It is not an hammer. It's called hanging man. But we are not going to that because it is not a strong reversal pattern. We are not going to hanging man. The green candle could be red or green, so it's not important. But if I may say to you, the green one is more powerful. So the color is not important. Trade them alike. But if I may say, the green is more powerful because the seller pushed the market down, then the bull started pushing from here. This is the opening price, and the buyer pushed it beyond the opening price, which means that the buyer won in this session. This one The candle opened from here, the seller pushed it down, and then the buyer started pushing it up, but they could not manage to push it above the opening price. That's why it's red. So if I may say, the green one is more stronger than the red one, and then it has no or little upper shadow. So this one, it has to be very small. It has to be very small. You can see this one, it has to be very small. If it doesn't have, fine, but if it has small upper shadow, so you have to take note. And don't forget, you must have the preceding downtrend. That is the first criteria that you must look for. The closing price is above or near the opening price, forming a tiny real body. You can see that the tiny real body. And how you must know, this is tiny real body, and then the lower shadow is at least twice the length of the real body. Now if you measure from here to here, and you measure from here to here, so the lower shadow must be multiplied this one by 2. That means from here to here, if you calculate this one from here to here to be 4 pips, from this base of the real body to the low of the candle has to be 8 or more. The longer, the stronger is the signal. If the lower shadow is very long, that means the candle is the signal is very strong. But the wick to body ratio has to be 2. So if you measure from here to here to be 5 pips, from here to here must be 10 pips or more. It could be 20 pips, can be 30 pips or more. It now depends, but it has to be 1:2 or more. So that is it. Let's go to the next one. We have the bullish engulfing. So you know, bullish engulfing, we have a red candle and a small red candle followed by the long green candle. This shows that the bulls, they are in total control. I like this signal a lot because it shows that the time of waiting is over. Now let's move, you know, and you must find it at the bottom of the downtrend. You can see that this preceding downtrend is very common to all of them because you can only find them at the bottom of the downtrend. By the time we get to how to trade it, you are going to know it very fully. And then a shorter red candle followed by a long green candle, you know, a very small shorter red candle followed by a long green candle. So you don't compromise this. So it has to be very long and it has to totally engulf this one. And the green candle opens lower and closes higher than the red candle, completely engulfing it. So this candle must completely engulf the shorter candle. So it must be a very clear thing. And then if you want to know that this signal is very stronger, the longer the green candle, the stronger the signal. This particular green candle, if you want to check maybe it is a very valid and confirmed signal, it must be longer than the previous 10 candle. Must be longer than the previous 10 candle. I'm just adding this one, it's not in the, I'm just adding it. It must be longer than the previous 10 candles. So by that you will know that okay, fine, this thing is very real. So that means the bulls, they are in it. That is it. So the morning star looks like an indecision in the market followed by an aggressive but not really aggressive as the bullish engulfing. So there must be a preceding downtrend. You tend to see this one often and often when you are trading. Morning star is very common when you are trading. And the bullish engulfing is also common when you are trading. Hammer is also common when you are trading. So you have to pay attention to it. There must be a preceding downtrend. You know, I'm telling you this. If you see this one at another location, it is not the morning star. You must know it. It must know it. So the first candle has a long and red body. The first candle has a long and red body, followed by a small candle that doesn't just followed by a small red candle. It can be red, it can be green. And the second candle opens close with small wick and tiny red or green real body. You know, this one is very tiny, so that's how to recognize it. But the third candle opens with a gap up and sometimes a gap down and closes above 50% of the real candles. So that is it. It closes 50% of the real candle. So this one closes 50%. You know, the middle of this one is here, and this one ensures that it closes more than 50% of this red candle. That is your morning star. Let's go to the next one. The next one is 3 white shoulders. 3 white shoulders is not that common in trading, but when you see it, you should know that the bulls are not joking at all. So that means they consecutively won in 3 sessions. So they consecutively won in 3 sections and they are not playing with it. There must be a preceding downtrend. So that must be a preceding downtrend. Is very important. You must see a preceding downtrend. The market printed 3 consecutive long green candles, and then the second and the third candles must be longer than the first green candle. So you have to take note of this. The first candle has to be green, but the second and third must be longer than this first one. There's a psychology behind it. The reason is that, you know, the bulls, they are just trying to get momentum on this one, but when they come to this candle, they really display their power with long green candle, and they display another power with long green candles. So this ensures that they are fully in the market. So there's a technique to how to trade this one. By the time we get to how to trade it, I will show you in the next video. The second and the third candle opens within the body of the preceding one, but closes higher than the preceding one. Now sometimes in forex you don't see the candle that open within, because the forex is a 24/5 market, and then sometimes most time market open where the previous one closes. So but in stock you will see that candle overlaps a lot in stock, because they have a pre-market, the stock have pre-market, market, and after hour, which is post-market. You know, that is stock. Stock is a little bit complicated if you are not familiar with the terrain. I'm a stock trader also. I trade stock, I trade crypto, and I trade forex, so I know the difference between all of them. But for beginners, I think forex is easier than stock. Let's go further. Basic pattern. This one is very common in forex also, and it can be interpreted to be, sometimes interpreted to be a hammer. You know, the bulls, they push the market down, then the bears push the market down, and then the bulls, they manage to push the market up. So let's assume that this one extends a little bit longer. It can be interpreted to be a hammer. So the same psychology with behind the hammer is the same psychology behind this one also. And then if this one closes the same height with this one, that means it's stronger. And if it's managed to close over it, that means it's a very strong. The reason why this one and the bullish engulfing is different, because bullish engulfing has a small red candle and a long green candle, but this one is going to be a long red candle plus a long green candle. Sometimes it must close 50% of the long red candle, but if it closes 100%, it's still fine. If it closes 120%, it's still fine, but at least it must close 50%. This is the half of the red candle. That's all about that. So we have twister bottom. Twister bottom is not that common, and then there are plenty of variation to it, and then sometimes you will see the one with the same wick, but they will not have the same body like this. So it's not that common, so I wouldn't want us to waste time trading it. But when you see it, just know that the reversal is coming. So it has a red candle followed by green candle. Both candles have the same low. The longer the wick, the wick or the lower shadow, the stronger the signal. So that is all about that. So let's go to the bearish counterpart. The bearish reversal pattern, the bearish candlestick pattern that we have, and the first one is gravestone doji. And then gravestone doji is like opposite of dragonfly doji. It looks like a T placed upside down, and then you must see it at the top of an uptrend. There must be a preceding uptrend before you see this and be a valid gravestone doji. You must find it at the top of the uptrend, and it looks like T placed upside down. When you place T upside down, that is how it looks. You know, you remember that dragonfly doji looks like exactly T, but this one looks like a T placed upside down. The opening and the closing price are the same, so you can see that market open from here, traveled up, then come back down, close. Market open from here, go up, then come back down, close. So the opening and the close price are the same, and then it has no real body but a long upper shadow. No real body but the long upper shadow. This is very key. So the longer the upper shadow, the stronger the signal. So shooting star, this is how shooting star formed. Shooting star is having its own upper shadows very longer and a very small lower shadow. Upper shadow is very long upper shadow and a small lower shadow. You must see it at the top of an uptrend. There must be a preceding uptrend before you can recognize this one to be a shooting star. It's very key. It's a very solid reversal candlestick pattern. And then it looks like a lollipop with a long stick. The candle could be green or red, or it could be green or red, but in this case the red one is very powerful than the green one. And why am I saying this? Let's assume the candle open from here, the candle open from this bottom, and then goes up, and then the seller begin to push it down and market close here. So in the real sense, the bulls still have a little push because they open here and they close here. You know, they still have a little gain. But here the candle open from here and then goes up, and then the seller managed to push it to the opening price. If they manage to close it here, that would be a gravestone doji, but they managed to push it below the opening price, and this one now makes it more powerful because at the end of the day the candle opens higher and close lower. So the best. So in my own opinion, the red one are more powerful than the green one, but you can trade anyone regardless. You just trade it. There's a way we trade it. I'll show you that one in my next video. It has no or little lower shadow and a long upper shadow, small lower shadow, sometimes without lower shadow, sometimes with small lower shadow but very long upper shadow. This is the key to it. The closing price is below or near the opening price, forming a tiny red body. So we have dealt with that one. The upper shadow is at least twice the length of the red body, so this one is the key. So from here to here, let's say from here to here is 10 pips. From the red body to the top of the wick has to be 20 pips or more, 1:2 or more. The longer the ratio, the stronger the signal. Let's say the red body to the wick is like 1:5. That's very strong reversal pattern. So let's go to the next one. The next one is bearish engulfing. Just like the bullish counterpart, we have the bearish engulfing, which states that the bears, they are now totally in control. There's no make mistake about it, they are now in control. A small green candle followed by a long red candle. So you must find this one at the top of an uptrend. There must be a preceding uptrend. So, and this one must be formed at the top of the uptrend. And if you want to see that this signal is very, very powerful, this long red candle has to be longer than the preceding 10 candles. This one is not in the manual. It has to be longer than the preceding 10 candles. That will show that now the bears are fully in the market. The shorter green candle followed by a long red candle. The red candle opens higher and closes lower than the green candle, completely engulf it. So you know when we say engulf, that you don't even see this one again. If you are looking from the right side, you don't see this one again. It's completely engulf it, and then it engulfs it. And then this one must be longer than this one. That's very, very key. So you don't need to be measuring it. You have to see it very clearly that this one is longer. That is bullish engulfing. And if you want to know that the candle is very, very valid, that will be longer than the previous 10 candles. So that's the valid one. The longer the red candle, the stronger the signal. So just like I'm telling you. Let's go to the next one. Evening star. Evening star is just like a morning star, but this one is found at the top of an uptrend, and then there must be a long green candle followed by a small green candle or red candle. In this one could be green or red candle, and then another red candle, and then this red candle must close at least 50% of the green candles. So the top candle opens with a gap up and closes 50% or below of the first candle. So this candle must close 50% of this or more. So that is an evening star. You are going to see more of evening star, morning star when you are trading. So you have to pay attention to it. This is a three dark crows or three black crows, as the case may be. So this is another aggressive bears in the market. It shows that the bears, they are totally in control, and they won 3 consecutive sessions in a row without any hesitation. So there must be a preceding uptrend. So that is very, very key. There must be a preceding uptrend, and then you have a red candle which is relatively small compared to this one, but the second and the third candle must be longer than the first candle, which shows that the bears, they are throwing their weight into the market consecutively. Then after this third candle, you can now begin to see retracement. I will show you how to trade it in my next video. Make sure you subscribe to this channel and you don't miss out from the beginner series. So I'll be dropping back-to-back videos on the beginners, and don't forget to join my free telegram channel, where I drop the free signals on most of the pairs that I trade. And then the group, you can ask questions, you can do many things in my telegram group. Let's continue. The second and the third candle must be longer than the first red candle. This one must also be long. So it cannot be an indecision candle. No, it has to be a distinctive candle, but this second and third one must be longer than the first one. That's the criteria. The second and the third candle opens within the body of the preceding one, but closes lower than the preceding one. That is it. Sometimes in forex, this thing usually don't happen in forex. For candle to be overlapping and they are going the same direction, it's not too common in forex, but in stock, many candles to overlap because of the different things that usually happens in stock. Just like I said earlier, that in stock we have pre-market, we have market, and we have post-market. So they have 3 different things within the trading window, which is very, very complicated. And that's why in stock you'll be seeing a lot of gap in the chart. So I'm a stock trader, I know. Dark cloud cover and the shooting star, sometimes they have the same psychology behind them. The bull push the market down up, and then the bears push the market down. If this red candle extends to this level, that is a completely shooting star in psychology. There's a way where by the time we go deeper in our session, I will teach you how to interpret candlesticks. So how do you recognize it? There must be a preceding uptrend. This is very key. If you see this one at the bottom of the downtrend, it's another thing entirely. So there must be a preceding uptrend, and then the long green candle followed by a red candle, and then the red candle opens with a gap up and closes 50% or below the real body of the green candle. Sometimes in forex also we see this gap up, maybe the opening of a day or the opening of the week or something, but oftentimes you will not see the gap up. It will open the same level as this one closes. It's still the same thing in forex, but in stock, sometimes it's gap up, and when it's gap up is when it's powerful in stock. So you have to understand that. If you are a stock trader, you have to understand that. And then that is all about that. Let's go to the twister top. The twister top is the opposite of the twister bottom, and then oftentimes I don't trade this because I see more candles of more of other ones beyond this one, and that's why I place this one at the low. So it must have the same wick, and you must have it at the top of the uptrend, and then also there must be a green candle followed by a red candle. So not red and green, it must be green and red. So that is it. You must follow it. Both candles have the same high, not low. Both candles have the same high, not low. And then the wick are the same. The longer the wick of upper shadow, the stronger the signal long upper shadow. So that is that about what we have for us in our candlestick our reversal patterns. So subscribe to my channel, click the like buttons and notification button to see the next video. In my next video, I will show you how to trade it one by one. I'll be taking it one by one. I will start from Dragonfly Doji, and then Hammer. I will take the two together, and then I will now go to Gravestone Doji and the Shooting Star. I will trade that one. So ensure that you subscribe to my channel. If this is the case, subscribe to my channel so that you don't miss out from the videos. Thank you.